Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today is Friday, our Primary Vision Frac Spread Count. So we'll go through some of the spread count, and then we're going to touch on what's happening with rigs. Where do we see pricing over the near term, and then we're going to go into more of a little bit of a macro backdrop, and just touching on retail sales and Michigan sentiment data, just to look at where are things going, and again, just kind of feeding into what we've talked about. We're going to keep it a little bit shorter. We covered a lot. Some shows I feel better about than others, but I think that the most recent econ show is actually a pretty powerful one in terms of what we were covering and how things are starting to fall the way I think we thought they were going to. So without further delay, the Primary Vision Frac Spread Count is up 8. So we went from 244 to 252. And this is, again, right in line with what we've been saying. We were at least I was thinking that we were going to be closer to this 250 by the first, last week of August, first week of September. Instead, we had a little bit of a delay, but now we had a nice little spike. And when you look at where we're seeing a lot of these additions, it's not surprising where, in terms of some of the smaller entities, but again, in the Permian, in Appalachia, in Anadarko, and then in the Western Gulf, when you're starting to think of Haynesville and some of this natural gas. So when we look at natural gas at $5.11 now, we have to keep remembering and looking at what are the expectations for weather as we start to gear up for what is shoulder season going to look like? What is LNG demand going to be? And then when we start looking at NGLs, and one of the things for those that have been following us, we've been very bullish natural gas liquids since last year, especially propane, especially given the fact that propane, the demand rebounded almost instantly. So I think there's going to continue to be a lot of that push through. And then on Twitter, I had some great questions asking about what we were thinking about a potential gate going up for exports. And this is going to be something to watch. And we're going to talk about this every week now on the EIA show, and not really talk about it because it's either happening or not, but we're going to look at where are days of cover, because that's really what is going to be the most important in terms of what is in storage and do we have enough to fill demand. And that's going to be important on the propane side as well as natural gas, because there are mechanisms that can be used to pause or delay or just stop outright some exports. So again, these are going to be things to watch, but we're continuing to see frac spread activity going up, and we were expecting to see 254 or so by the end of September. So now we're in spitting distance, which is very much going to be a doable backdrop. And remember, we've been saying that October is going to be another strong month. So we do expect to see that top of 275, and then we expect to see that through October, November, and then start to see some seasonal declines, but not to the same level that we have in the past as we continue to see a lot of this growth. And then when we flip to the rig side, because the reason why we're going to talk about rigs here is because one of the things that we've been very adamant about was that we're going to see rigs come back more aggressively and continue to see rigs added. Frac spreads were also going to be added, but not to the same level, because they have to account for DUCs, start to make up for some of this drilling. And when you look at what the weekly change is, it's important to look at what is offshore. So you can see offshore, there's no real change. But then when you look at the U.S. land, that's where you start to see some of this difference, with land going up by 8 and oil going up by 10 in total on a mixture of directional, horizontal, vertical. So we do get a meaningful pop increase. And there's going to be, that's going to continue. We're going to keep seeing some of this. I mean, even though we've, crude is down today, it's still at 72. You have NGLs that are at multi-year highs, and you have natural gas at $5 with pretty much a very limited, if any, ability to have gas to coal switching. So again, there's a lot of opportunity to get some of this going and to see some of this continue to move in a strong manner. Now, just to kind of catch up on some of the things that we've talked about previously, and then we're going to talk about it in a bit more detail. Initial claims was up a bit. There's a little bit of Ida in that. There's a lot of hurricane noise. So we do expect to see that continuous trend of declines, but just the job additions are going to be something to watch, because we're seeing a lot of, not to say that they're going to be negative, but there's not going to be as strong growth as the market was expecting. But again, as if you want to go back and look at when we were talking about jobs for September, very much in line with what our expectations are. Now, when you look at retail sales, you can see that they beat handedly against the estimates, but it's important to look at this from two different perspectives. So one, it was a strong back to school season. So that is 100% a good thing. That's not a bad thing at all. But at the other side, you had a big revision from the previous week. So when you look at the revision, it just made month over month a bit better. But again, this is going to be what do we look like going into the next, really September, given that things have slowed down a bit, and we'll talk about why they've slowed down and what does that mean going forward. And then when you look at Michigan sentiment, you can see that the survey was for 72, came in at 71, but current conditions have gotten a bit worse and expectations have gotten a bit better, but still on the lower end. And that's when we look at just what is that sentiment looking like. And you can see that we're back down to the lows for the most part from the pandemic. It's a little bit off, bounce off the bottom, but this is where we're starting to see people are concerned about inflation, wages or pressure is there. You're starting to come back to some sort of normalcy. And there's a little bit of unease. And then when you look at some of the big pieces, the buying conditions for homes, vehicles, and durables continue to come down. It's at the lowest that it's been at since essentially 1981. So this is when we're looking at retail sales, when we look at durable goods sales, and some of the headwinds that are going to continue to kind of crop up, especially as we come into a more difficult period when you look at September into October. And then when we consider that we're going to be heading essentially headlong directly into the debt ceiling. So now when we look at some of the intent, and this is something that has come from Arbor data, we talked about this when it came out, that we did see this strengthening in terms of what people were looking to spend on. You can see that hotels, some of this activity, but then some of the other bars in general, you can just see that there's some seasonality into it. When you go back through 2020, you can see that there was that nice little pop that came into September, and then things ebbed off. So we want to see, where are we on search trends? Where are we on retail sales? So August obviously was good, but we want to see it continue into September, and there's some headwinds that are appearing against that. And then when we look at that current and future general activity index, this is what we are also looking at when you look at some of the Fed data. In terms of future activity, continues to come under a little bit of pressure. We got that nice little bounce in current, but the future is what we're starting to get a bit concerned about, or have been concerned about, and it's starting to play out in the data sets, especially the leading indicators. So those are things that we have to look at when we're considering what is the economic growth going to be. And as we've been saying, it's not going to be negative. It's just we're already seeing some of these estimates come down, some re-rating in general, just to account for some of these headwinds that have continued to kind of crop up on the consumer side, on the investment side. But again, there's on the oil end, from a supply side, from activity, things continue to be robust. We have seen some price increases come through, which have been supportive, even though there was some pushback initially when you look at the negotiations that were happening in April and May. And then they finally came through in June, and now things are starting to set up and move. I think along the lines that we've been outlining. A little late on some of it in terms of we thought it was going to be a week or two earlier, but here we are. And then just a quick update on Ida. There's about 400,000 barrels that's currently offline on the oil side, 450,000, but Shell has brought back another 100, which is going to bring that down again. We've lost about 28 million barrels, just over 28 million barrels at this point of production, but we should see that continue to come through by the end of the middle of next week. So we hope you have a great weekend. Keep this one short after the longer ones that came out this previous cycle. We'll talk a bit more about pricing. We've seen Fortes offer cut. ESPO's gotten a little bit stronger. Russia's actually increasing some of their exports. I should say loading schedule, just based on they've taken down additional refining. So there will be some of that coming back into the market. And it's one of the things to look for. But we're going to do a much deeper dive again on the international market and the physical market and EIA segment 3, and try to keep this one a bit shorter for you. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.